Hello and welcome to another edition of the Business and Banking Dialogue of daily show that we bring to you with an subject matter expert from the banking and the payment industry. Uh, Today, as normal, we are live across EPS channels, YouTube, Facebook, Twitter, and LinkedIn. I'm KK, your host to the show. So, what do we have for you today? Okay, we want to recognize a very experienced banker who has been with us from day one of our show and has been very active and very participative. He has been asking very interesting questions to our subject matter experts on every show. Okay, his questions have been appreciated by one and all. Okay, and they have a lot of thought and experience that he brings to his questions. So, without much suspense on that, please join me in welcoming Mr. Harish Prabhu. I will be discussing with him on the topic of emerging opportunities in retail finance. Uh, Ladies and gentlemen, in the wake of pandemic financial crisis, profitability pressures and changing customer behaviors, as you know, are driving a fundamental change in retail business, particularly in retail lending. In order to thrive in this new environment, banks will need new skills in addition to their traditional expertise, areas of expertise, if you can call it. Critical new capabilities will include improving customer centricity and personalization, widening the breadth and depth of customer reach, and embracing perhaps open banking and ecosystems, such that the banks are able to meet the realities of retail finance. So, to discuss the emerging opportunities in retail finance, please welcome Mr. Harish Prabhu. So, a brief about Harish Prabhu. You will see a slide also on your screen. Mr. Harish Prabhu, a reputed global commercial investment banking, and financial services and technology professional. He has over 30 years of diverse and senior leadership experience for the India South Asian franchisees of banks such as JP Morgan Chase, Mashreq, TAIB, and Credit Agricole in the Suez. So, you can see that he has got such a lot of experience and across various MNC banks. He is also an angel investor, board member, advisor to a few India and Silicon Valley financial technology companies, especially in the lending and leasing, payments, financial services, and defense manufacturing. So you can see further his credentials right in front of your screen. So without much this thing, ado, let's good afternoon, Harish, and how are you?
Yeah, KK, thanks. Thanks a lot. Rainy
Yes.
day, and thank you and EPS for giving me the opportunity to, actually interact with your fan club, if I may say, because I'm one of those
Yes,
who have been
absolutely.
begun to
So
like your show quite a lot, and it's been a very enlightening experience for me also to listen to subject matter experts, and
yes,
hopefully I can do justice today to the topic on
sure,
hand.
sure. Yeah. So how does it feel to be on the other side of the table? You're on the hot seat today.
Well, one of the simplest things is asking questions because obviously
Yeah.
answering them requires a lot of groundwork and preparation as well as eloquence and mastery over the topic. So you may judge me at the end of the show.
I'm pretty confident you have all of it with you. You have the experience, you have the eloquence, you know how to talk. What is it? You have 30 plus years of experience. It's got to be a dream for you. Okay, let's get into the show, ladies and gentlemen. For my first question to Harish Prabhu, sir, what have been the broad models for retail lending? How have how have they evolved so far, and how do you see them changing in the future? Because the pandemic is forcing people to change things. So what are your thoughts, Harish, on this?
Sure, I'll go back to a little bit of philosophy. It's been an oft-repeated
Oh,
statement
okay.
that one draws upon lessons from history and the empirical evidence or data
Yeah,
from history is an indicator for the, or rather is a strong indicator for the future. But as
yeah,
somebody recently stated, in a post-COVID world, the past is no indication of what's in store for the future. So all this,
absolutely.
theory, has been sort of, disbanded by this event. So
Yeah,
given the backdrop of that, I will go back to a little bit of history in terms of the rationale for lending, retail lending, etc. I mean, since time immemorial, individuals like you and me
yeah,
essentially earn money for to make a living for two primary reasons. Meeting consumption needs of ours, current as well as future, as well as and for our self and family. And the second is asset creation for self, family, and for social needs, right? Social interaction,
yeah,
like a house
yes,
or whatever. Now, obviously, it presumes that it is presumed that whatever activity, economic activity we do, the
yeah,
income really suffices our consumption needs, right, on a daily, monthly, whatever, right, periodic basis.
yeah,
And at the end of a certain review period, there's an investable surplus, right, in order for
yeah,
it to keep aside for future consumption, or for that matter, building or creating an or corpus for asset creation. In an ideal world, it doesn't match, right? I mean, some months you may have surplus, some months you have uh, deficit, etc. and all. Then suddenly, if you need an asset creation, you don't have the funds at all. So what do you do? So that is when you go to an external funding to require to go for external funding, which can be probably to going to family inheritance, maybe loans from family, friend, extended relatives, whosoever it is. And lastly, you'll go to,
yeah,
probably the money lenders, traditionally, in India as such, right? Before go to many lenders, and then finally, organize institutions such as banks, quasi banks such as NBFCs, credit cooperative structures, societies, which are, like a large association of persons. But, since we are talking, so also, going back to history, we need to, it's very important because India traditionally post-independence, was not a rich country because, we were actually, the large part of it was, village. And capital, India has always been a capital scarce country after independence, right? And capital formation as such wasn't happening unless and until you have industrial development, right, over a period of time. And the trickle down effects of industrial economy, etc., have to go down to the person or the individual. So that took a lot of time, but nevertheless it's very important to know that you can distinguish the eras of the let's say Indian lending or banking can be now distinguished into two distinct eras. One is post independence and now post
mhm,
COVID, in my opinion. And I'll just give you a
yes,
highlights of what you call, these are milestones, right? I mean, and, setting up, the first sort of, apart from the Imperial Bank, which is now SBI, etc., and all, right, and and the Maharaja's banks which were there, etc., and all. The setting up
yes,
financial institutions post-independence like IDBI, IFCI, ICICI, etc., UPC, that what you call was the first step to actually do banking. Then the nationalization of
yeah,
traditional banks in 1961, the objective being to actually provide banking and services and potentially lending to the hinterland and masses. Then came suddenly after that it's directly 94 where banking license was liberalized. 18 bank licenses were given. ICICI Bank, HDFC, Axis, etc., who are the beneficiaries, right? And IDBI, etc. Then in 2003, Yes Bank and Kotak Bank. Then payment and small finance banks, and Universal's Bank 4 5 years ago. And one very significant event is India Post being converted into a payment bank. Progressively over the years, cooperative banks having been increased from X to today appearing 1,400 in number, which essentially do rural banking.
yeah,
State cooperative bank framework under the NABARD, right? I mean, the state cooperative, the district central cooperative, and where the NABARD is the regulator as well as the lender. This is primarily to do agricultural lending, etc. And also, to a large extent, post what you call over the last 20 years, post liberalization in 91 or so, the phenomenal growth of NBFCs, where NBFCs, I mean, if I recall well, only, a significant NBFC which had opened were, like HDFC way back in, I think, 77, primarily for financing, home loans, right? Retail loans.
Yes.
Home.
Yeah.
But you see, post liberalization, there have been a whole host of NBFCs, right, over a period of time, which are now today very large, or some of them too big to fail also, from an NBFC perspective. Some of them include the ILFS, Edelweiss, IIFL, India Bulls, Diwan Housing, the name it. There's a mixed bag of everything, right? And now the SFBs, which are Ujjivan, Janlakshmi, whatever, were all small, all NBFCs, right? Who are essentially trying to meet the needs, credit needs of millions. Or Janlakshmi is a classic case of meeting the needs, the lending needs or banking needs of the urban poor in Bangalore, right? Not necessarily rural. So, so much so that the NBFC sector also has become a very large player, right, in terms of lending retail also. And there have been a mixed bag, if you know that, and now, so because of the government's initiative to ensure that, the regulation for maybe, slowly the government is moving towards, a very common framework of regulations. Which is for banks, which is the most robust one. So it should be logically slowly extended to the cooperative banks, the NBFCs, etc. and all, right?
Yeah.
And hopefully in the future that will be actually better for the what you call a whole system as such. The positive outcome of retail lending, which after the liberalization of high quality captive NBFCs are the captive NBFCs. Okay. So if you see that Bajaj Finserv, right? I mean, a lot of banks have been, appreciating what Bajaj Finserv and all has done, right? Coming out of nowhere, they have created such a large sort of client base, etc., and met the aspirational needs of a whole generation of Indians, including financing their television to car to scooter and all, right? Bajaj Finance, Hero Finance, TVS Credit, Mahindra Finance, Tata Capital, G Capital, right? And like Sriram Transport and all. So banks have also, actually created large subsidiaries like bank assurance, broking, etc., to meet the needs of the retail customers. So if I were to understand, the retail banking space or retail lending space, over the last 20 years, it has really become quite robust in terms of number of players, right?
Yeah.
A lot of players are fallen by their wayside also, right? A classic case is probably ILFS, which is wholesale. Then, RBI also canceled the licenses of 2,000 NBFCs about 2 years ago, primarily to, they were not doing, they were shell companies, etc. and all, right? So, but having said that, the take on this is this whole growth over the last 20 or rather post-independence has still not met the needs of the poor, so to speak, right? Especially the last 20, 25 years of growth, especially, of these NBFCs, banking system, etc. The effects of that have been with the middle class or the urban middle class largely, it's urban to some, and they have, their lives have been better, banking services have been better, lending has been better, right? Hence, their lives have also improved. And if you see the historical backdrop of saying that, India was a capital scarce country, so we have achieved quite a significant amount over the last 20, 25 years in essentially, doing retail lending for whom it was necessary and, whom it was possible to lend with the right credit metrics in place.
Yeah.
So lastly, on this point, I wanted to tell you that if you, two of the largest banks in India, one obviously State Bank of India, which is the largest, right? And HDFC, which is the private sector. So if you see their balance sheet 30 years ago or whatever, the percentage of retail loans to, wholesale loans would have been abysmally low, right? So today, if you go to see SBI's book is probably, I think it's 36%, 32, for FY20, 36.19% is a retail loan book. And for HDFC, it's even more by because it's 48% of the loan book is retail. So I think, from a historical backdrop point of view, retail lending has come a very long way. And obviously, what is in store for future is something which I will come to, in the future next questions, so I thought that, to the
Sure.
laying of the backdrop is quite important for us to know about
Absolutely.
what is in the future.
Thank you,
I
Harish. I
hope it
think
answers.
well said. Yes, absolutely. I think you laid the perspective on the retail finance and what is the future looking like. And so, by talking about what was in the past, I agree with you. 20 years has been a robust, retail financing happening. So, thank you for giving us that opening remark, and I'm sure the participants appreciate that. So, let's look at the there's no talk which is complete without talking about COVID. So post COVID, uh, I believe that the phase of internal globalization is the need of the hour after the external globalization, which took place since 1991 and had a great run of 20 years. We talked about it in the last question. How would that affect retail lending?
Sure. See, as I just said that the effects of liberalization were benefited by people like me also, etc. Thanks to the fact that India also from an economic perspective became more globalized. So IT services, technology, and what have you, right?
Yeah,
So if you there's a saying that from Boston to Bangalore, the Bangalore started to benefit over the last 20 years, 25
yeah,
years, right?
yeah,
Going from Bangalore to BBD, which is probably about, maybe, I don't know how much the distance is, maybe 100 kilometers, right?
yeah,
Just complete 70 or whatever. Complete no, what you call, benefits of the liberalization, and especially in terms of including banking services, leave alone lending, right?
yeah,
So I've had the good fortune of, being working for a company called Sarvatra. I had what do you call, I noticed these anomalies where in Mumbai you have, whatever you want to in terms of world-class services for bankers, for even basic banking, not even lending, for ATMs, debit cards, etc. But you go 70 to 90 kilometers, to a village close to it, the services will suck, right from telephony, including, the connectivity, etc.
yeah,
So, um, so is that a great sort of achievement? Yes, it is. But at the end of the day, now I think is the time, and especially post COVID, right? Because COVID has shown us a lot of things where, as I said, the past is not the precursor of the future. So, we have actually in 3-4 months time, right, completely changed the way we live our lives, right? Work on a daily basis. And thanks to technology, really, I think the world has not really turned topsy-turvy, right?
yeah,
The second thing is that thanks to the fact that technology today, I don't think so there's a big difference between Mumbai and a Solapur in terms of connectivity, or or a BBD and Bangalore or wherever, right? Or a Meghalaya, anywhere, right? So
yes,
we can actually conduct communication, conduct business, our work life, etc., from anywhere to anywhere,
yeah,
right? We can get transactions achieved. So, so if that is the precursor of the future, now also, we have to take into light that the certain governmental, what you call, reforms that have been, taking place progressively over the years, right? So today, as I said, um, today, let's say we are talking of today internal globalization. What does that mean, right? Oh, I mean, I don't want to sort of, because I'm no spokesman of the government, but let's say Atmanirbhar is the definition for, internal globalization, right? So what are we saying?
yeah,
Let's build our
yeah,
let's build internal capabilities and competencies in whatever, be it manufacturing or whatever, right? So how do we do that? If we have to do that, obviously we just cannot think about, okay, starting let's assume some auto manufacturer wants to put up a plant in India, right? I know for a fact in 95 and 96 and 97, I was dealing with Ford Motor as well as what do you call, uh, Ford Motor, GM and all, and BMW. All of these guys said, boss, we want to set up a plant in Pune. right? Because of Tata Motors, Automobile Hub, Auto Components. Then likewise, Hyundai went, they'll say only go to, and Chennai became the big hub. Today, they are not prisoners because we are taking off, grounds up, right? They can set it up in, a tier 6 town close to, I don't know where, right?
Yeah.
So, and why is it possible? Previously, we were maybe limited by our thinking, right? Pre-COVID, but
Great.
post-COVID, it's been a complete sort of, blue sky approach. So anybody would probably, okay, they will set up a plant in, for lack of a better word, let's say I said Solapur or, maybe be anywhere. So I don't know whether you're aware. Toyota has got a factory in BBD also, right? They started some time ago. So all like Chakan, they have got BMW, and it's become a German company.
Yeah.
Too many companies. You'll be surprised to know that, there's a business class flight, only business class flight from Chakan to Munich every day. Primarily because of the German.
Oh,
And that's been a huge success story, right? So what I'm saying is that now some green shoots, right, about how rural India will, throw up, what you call opportunities.
mhm.
APMC reforms, right? The Agricultural Produce Marketing Committee reforms have recently taken place. They've not been adopted, but they will. So that will, throw a huge national market for agriculture. GST is now, become, I think, done and dusted. It's become, mature. So it's necessary. So, and so centers and states have, worked out a mechanism of working together. So that's smoothened up. So if you see post-COVID, rural economy, right, has done thrice as well as the urban economy. I don't know, one of the most important benchmarks was, I think, I don't know whether that people have missed this, Parle G biscuits, right, which is the
Yeah.
barometer of the basic square meal, right? Anybody, that has grown the highest in 80 years, thanks to migrant workers, going back, as well as, rural consumption growing. There's been good rains, etc. and all. Then the, government's very notable sort of or noble intention of doubling farm income, whether they achieve it or not, it's not a subject matter of my understanding nor comment. But assuming that they meet something, so they're trying to actually make purchasing power much more robust in the rural segment, right? They started
Yeah.
off with DB, uh, and then now they're actually trying to ensure that a rural person is able to earn on his own and contribute to the economy, right? Likewise, electrification. So electrification is happening. Hence, the what you call the services or urban to rural India. The shift will be much easier, right? So if you go to, and lastly, as I said, the technology over the last 4 or 5 years has improved so dramatically, where and it's become ubiquitous, right? I mean, thanks to exponential of growth of connectivity, 2G to 4G, and probably now 5G, right? Cloud
Yeah.
technology and all. So today it doesn't matter where you would set up the whole thing, right? So assuming that the larger backdrop of the rural customer will be the more like the urban customer post 91 became more credit worthy. I'm sure that over the next couple of years and so, and these reforms will ensure that the rural population will become much more credit worthy. Hence, the opportunities that for lenders, but or retail lending is not necessarily only in urban India, but definitely in a very large way in rural India. And that I think is a sum total of all these measures which have been taken, and including the advent of technology, electrification, and what have you.
Okay. Yeah.
So banks, NBFCs, or whosoever, right, who want to essentially, target and capture the next growth phase, have to perforce look at a completely uncharted territory of, semi-urban to rural India. But at least the cost of doing business and the infrastructure is there, significantly there. I think it will still improve, roads, etc. and all. But I think, it's about time where, the banks have to put in or everybody has to put in a space. The strategy being, led by rural and, followed by urban India.
Yeah. Thank you. So you touched upon great aspects of the rural economy also, and that the banks have to transform. But yeah, you have a lot of experience with the cooperative banks who are essentially in the rural space and maybe hinterland space of the country. From while the urban people do get a lot of benefits of the modernization of retail finance, do you see that kind of a change happening in the rural areas? Because they have been getting what they have been getting for the last so many years. There's been no change from a service point of view. Do you see that happening?
Absolutely. I mean, I can, see I'm also currently doing a lot of stuff in the rural space where
Yes.
essentially, entails lending. The problem is that it is not the same way as what you call, see, if bankers or lenders, want to essentially, meet the requirements of rural lenders, and they want to templatize their past experience of urban India and, put it on today to a rural customer. So let's say I'm Harish Prabhu sitting in Mumbai, and let's say there's Harish Prabhu too sitting in, Osmanabad, right? And let's say I'm earning, 1 lakh of rupees, and that gentleman is earning, let's say 25,000 rupees, doing something or other, right? Now, if you go to see the
Yeah.
basic
Yeah.
banking services of, having a bank account, having a payments, having access to the payments ecosystem, right? Despite he not being the customer of, let's say, an HDFC, ICICI, State Bank, or whatever, right? Despite he being a customer of a small rural
Yeah.
cooperative bank also, he has got access equally like me to banking, basic banking services, including ATMs and what have you, right? But people are talking about UPI, right? Okay, he doesn't have, not all customers of all banks have access to UPI services. So, right, through his own bank. So he has to, so it's still, a work in progress. Now, I'm talking about the banking services, but, over the last 4 or 5 years, thanks to cloud technology and whatever the banking in rural India for the basic services, and in urban India, there's a gap has been bridged very, very significantly. Now, coming to what is the next step, right? I mean, obviously, in order for us to raise the standard of his living, and if he requires a loan, right? That's where the banking system and the quasi banking system, both, firstly in terms of infrastructure, by infrastructure I mean coverage, right? Both from a bank branch point of view, or for that matter, credit metrics perspective, falls short. Now I'll tell you why. Because typically, as I said, if Harish Prabhu was to be given a loan, there's a record of, for the last 20 years or so, right, of he having been in the ecosystem of banking. They have my, credit card, debit card, they have my bank balance, blah blah blah. So they have my credit score, etc., etc., etc. So for me to get a loan, right, or you to get a loan from a bank or an NBFC or whatever, is probably easy, and they're not doing a favor, right? I mean, they are absolutely have access to data, past data, which they are trying to essentially analyze and think that, yes, boss, this guy is credit worthy, hence we will give the loan. Now, there's a what you call, for lack of a better word, it's a no oxymoron, no, it's a paradox of sorts, where
Yeah.
the likes of KK and Harish Prabhu may not necessarily require the loan, right? Because we may have net investable surplus thanks to our sort of, maybe age, as well as the fact that we were urban and we are beneficiaries of the liberalization. But the rural guy is not, he still is there. He's not been the beneficiary, but he needs a loan for maybe buying a house, maybe buying a vehicle, maybe buying so that is where he doesn't have a credit history. He doesn't have that much of, credit worthiness, right? And credit
Mhm.
worthiness is established based on credit history and, a transactional history and what have you, right? So if he wasn't in the banking system, for so many years, how would he have been? And he's not borrowed money. He had never access to money apart from the money lender, right? Which is not in the formal system. So if you
Yeah.
templatize it, so today, let's say, I want to lend it to this guy in, Solapur, who's, I will come up with saying that, my credit metrics is I will not lend this guy.
Yeah.
So that is the biggest challenge, and that is the biggest gap which we need to bridge.
Sure.
So,
Thank you.
and obviously, the efforts are beginning to happen, and I think a lot of people prior to me, in the payment space who have come speakers have alluded to one of the biggest sort of what you call levelers would be the account aggregation model.
Yes. Okay. Thanks, Harish. That's a good perspective again. So, ladies and gentlemen, you see the depth of Harish Prabhu. He has Mr. Harish Prabhu, if you don't mind, and he has a lot to to tell you, and a lot to learn from him. So, kindly put in your queries in the Q&A box right now, or you want to ask a question directly to him, you can do that also. So look forward to your good questions while I continue to have discussion with Mr. Harish Prabhu. Mr. Harish Prabhu, what and how do you think that the increased use of tech in the wake of COVID-19 will give a fresh impetus to retail lending, especially in rural India? We did talk about it a little bit, driving the next phase of growth and social good.
Sure. Absolutely. I mean, the pandemic has brought home the benefits of technology for both urban and rural India, right? I mean, today we are talking to each other, talk as if we are talking sitting across each other.
Yes.
I mean, which I think in February of 2020, we never thought we will be doing this, right? We would have probably met across in a conference room. So, and I don't see that we are missing the conference room. So, so obviously, thanks to technology and thanks to whatever, right? This, by the way, this recognition of what technology has been, has enabled us to do, has not been, unnoticed. Right from Prime Minister to probably a small school student in rural India in maybe first standard, right? Leave alone urban India. Maybe in a tier 6 town, KG kindergarten student would also be using this technology, learning from the teachers, right?
Yeah.
So I
absolutely.
That's the profound effect of the technology, which has happened. So that's one of the examples which is really now. If you so that the second is if you see now the pandemic, right? Now government, rightly, wrongly, or whatever it is, right, to actually have some sort of traceability, the Arogya Setu app, right?
Yes.
The classical case of usage of technology whereby, and I use it very regularly, and I know that, how many people whom I met in my contacts who are potentially high risk, low risk, or whatever. So as long as, everybody follows that, I think, so usage of technology is really, I think helped us to at least be aware. Legal proceedings, never thought of before, right? On video conference. So judgments are being, by Supreme Court. BBD transactions have gone through the roof. I mean, fortunately, the direct benefit transfer program was put in place for 5 years ago. The benefits are now accruing. I think, in May and June, I think 400 million Aadhaar-enabled transactions were taking place, right? I mean, so there is a huge amount of technologies which have been utilized for social development. UPI and digital payments, I don't need to wax eloquent because people have told yesterday, Mr. Hota, the father figure, has essentially, sorry, just a moment. Pardon me for that. So UPI is going through, a huge exponential growth, albeit in a smaller, user base compared to the whole nation, right? A lot of adoption, and people, sitting at home have, now realized we always were thinking when I was in the payments domain, how do you increase adoption? How do you increase adoption of digital payments, right? I mean, one pandemic, everybody is, by perforce, who were never wanting to, has done, right? So, the rural cooperative banking ecosystem progressively has been technologized, for lack of a better word. So the entire banking, you've been also at the cusp of that. So I think all building blocks of an enabling environment for leapfrogging, of the usage of technology are ready, right?
Yeah.
and most importantly, the RBI's, NPCI's, and IDBRT's role, they've done a marvelous job in terms of the India stack and what have you, right? To have actually, created the backbone, and now they are, focusing on removing all the hurdles and inefficiencies for credit dispensation through the account aggregator model, right? UPI 2.0. And I can, that's a separate matter how UPI 2.0 will enable the growth of lending on a standalone basis in a huge way. That's a separate topic matter discussion. The OCN network, Open Credit Enable Network. So, a whole lot of things. And the fact that, the digital adoption by, all and sundry due to COVID, both in terms of, communication as well as in terms of payments, mind you, yeah, there's been a dual benefit of, if I may say, people have not only learned to, communicate, from work from home, right? But also, do their commercial transactions sitting from home completely digitally. So that's so what the government would have, or let's say NPCI or whosoever, the ecosystem would have had to spend thousands of crores of rupees to propagate digital adoption for the next level of, customers, let's say, has automatically taken place thanks to COVID, right?
Yeah.
And we should not undermine the fact that two more things, right? The GSTIN network, as I said, has become very, very robust. Where what does it enable? What's the benefit? Where there is going to be free goods and services and movement of people across the what you call country, right? Which was hitherto not possible. So that means that commerce, trade, etc., including, let's say, the NETC toll, you can go from Kanyakumari to, to Kashmir without actually having to pay cash, right? And the JAM, the Aadhaar, bank account, mobile also, and bank account also, will be able to be used nationally. So wherever there is going to be, free flow of goods, people, and services, so the ubiquity of providing any lending, right, or any banking services is going to be much, much easier. And that's the, most important thing. And I do not know whether people have sort of understood the, what you call, the gargantuan sort of, nature of the beast, or if I may say, a good beast that we have created, and it's all ready to be, harnessed and, ready to grow.
Absolutely. So you have kind of given us examples, but I want to actually ask you: are there any use cases of the emerging need for retail lending, and what are the issues in meeting those needs?
Sure. Again, I would if you go to see any banks, let's say I gave you the example of SBI and HDFC, right? So if you break up their what you call loan book, right?
Yeah.
Retail loan book. If you go to see, auto loans, right? I mean, 4-wheeler loans, personal loans, home loans, business banking loans, and gold loans, credit card loans, then commercial vehicles, two-wheelers, etc. and all, right? So let's take the case of, two-wheeler loans, yeah? Because two-wheeler is a retail lending, it's a retail lending, right? I mean, they lend to, a person. So if you notice that today, over the last 20 years, the exponential growth of two-wheeler industry, right?
Yeah.
Bajaj, the internal, and I'm once again, clarifying, internal combustion engine two-wheelers run on petrol, right, has been stellar, or something amazing. And to a large extent, okay, just to give you a perspective, today or just until prior to the pandemic, there were 2 crore two-wheelers being sold every year, 2.1 crore.
Mm-hmm.
So that's the, so in a population of 130 crores, every year 2.1 crores, scooters, bikes, or whatever get sold. I think now for the last couple of months, during COVID, it had come down and the run rate was 1.9 crores. But I think, post-COVID, it's once again, going back. So now what is happening? Why has this, exponential growth taken place where 2.1 crore vehicles are being sold? The biggest, is the enabling of finance availability. So much so that, over the last, so today, and it's known as financing penetration. The financing penetration has gone up from, let's say, 10% many years ago. Now it's nearly 50%. So 1 out of 2 bikes are being purchased by people on loan. So if you go to see, uh, uh, these were driven primarily by the two-wheeler loan company, so two-wheeler manufacturing companies like TVS, like Bajaj, etc. And that's Bajaj Finance, Bajaj Finserv, etc. Are all the creation of this Mahindra Finance, Hero Finance, etc. And they have become very, very large NBFCs, but they are largely captive NBFCs, right? So if you go to see Larsen and Toubro, largest Larsen and Toubro L&T Finance is the largest standalone financer of two-wheelers. Yes. So today, and okay, now when you go to, okay, so that's been the history. But now going forward, what is happening is, obviously, two-wheeler industry, slowly electrification is most important, right? So now the growth has to come from purely because of the environment, etc. We cannot burn so many fossil fuels. There are some protocols, etc. So electric two-wheelers is something which, I think somebody else, speaker talked about, which is the future. It is nascent to non-existent at the moment, a very, very small industry. Just to give you a perspective, FY20 was only 150,000 vehicles. Okay.
Yeah.
Compared to 2.1 crores. So now where is, then the second is post pandemic. The trends are that urban mobility, the personal mobility, right, is shifting toward not going on a, let's say, a BST bus, not going on a rickshaw, not going on a what you call taxi or an Uber. Uber and Lyft closed down their California operations, I think, yesterday, right? So that's a global trend, right? People want to have personal mobility. So they are now, what is happening is that the trends are that the personal mobility space for a guy who can afford a car, I believe the Maruti 800 and the smaller cars is going to pick up, right? The second is that the two-wheeler as a category is going to go up, right, in terms of the requirement, because two-wheeler is personal mobility. You don't need, it's not shared, right? But most importantly, the demand is going up in rural India. Two-wheelers, till now 20 years, they've been giving loans to people like, let's say, as I said, Harish Prabhu, working for an IT company in Bangalore or a Pune or a Delhi or a Calcutta, who's got a credit history, who's got a salary slip, who's got all parameters from a credit perspective, all kosher, and you get a loan, right? So today what is happening is that because of the fact that the rural and it is going to e-two-wheelers, and not everybody can afford petrol, not everybody can afford a higher expense. So the demand, future demand is coming in through electric two-wheelers, which are unregistered. I don't know, I don't want to get into technicalities. There are low-speed two-wheelers and high-speed two-wheelers. Low speed is up to 25 kilometers. It's just like riding a cycle. So you don't need to register it. You don't need to do anything. But then, the buyers of those two-wheelers, primarily in rural India, including tier 6 towns, could be a small teacher of a municipal school, a milkman, or, a newspaper guy or whatever, right? Now, these people are the people who want to, buy a bike for, maybe 30,000 rupees. They will get upfront 30 or 40,000 rupees. So they need a loan of 35,000 rupees or so. So, but they don't have a credit history. There is no income proof. So now, if say, an NBFC or a bank has been used to, creating all its loans, and you can look up, the banks are saying that we have given loans, personal loans, as well as, mobility loans to people working with, good quality corporates with a good salary slip and blah, blah, blah. Now, if you actually, templatize that and, put that in rural India, you will never be able to capture the opportunity to finance that milkman who's got no income proof because he collects money in cash, or he's new to credit, he's not taken a loan before. So those are the huge opportunities. And that's where, the banks, NBFCs, etc., have to re-engineer themselves. And believe me, there is no, especially for no income proof and new to credit, the appetite is very, very, very limited amongst banks because they're unsecured loans. That's where the biggest opportunity is. Again, it's a paradox. So,
sure. Okay. So, Harish, there's got to be one major change that's going to happen. for you and me who have seen through the earlier banking, in terms of forms and forms and forms and many other things to be done, we see a shift that many of these have become digital in nature, so much more easy, much more faster. So we are able to appreciate that. But the Z, Gen Z, as you call it, okay, or the people or the kids who were born after 1997, they are coming into the workforce, and they don't know about all these forms and pen pushing that we have done. Now, when they come, their expectations are totally going to be different. Okay, they're that kind of a workforce. So my question to you is that how is lending ecosystem geared to meet their requirements, which will emanate from the future?
So very good question. Yeah, millennials as well as Generation Z, right? Millennials are, I think they're born 91, and I think Generation Z, when mobiles were, there. So when they were born, they
Yeah,
had mobiles in their hands playing. See, the Generation Z is a more consumption-oriented generation rather than a savings-oriented generation, and that is something which yeah, the exponential growth of e-commerce, right? Amazon and what have you, right? And payments, right? E-commerce and
yeah,
payments has grown exponentially thanks to the Generation Z and millennials, right? So they're consumers. One of the main things is that they're not savers and they're not investors in hard assets, right? They will
yeah,
invest for probably the future, maybe in financial assets like mutual funds, equities, etc. But travel, restauranting, etc., right? Socialization has been the major consumption pattern of Generation Z and millennials.
yeah,
And they mind, I mean, having grown in a very confident India, not a capital scarce India, right? These are largely children of my and your children, who have benefited from the global liberalization, and benefit, the trickle down has gone to them, right? So they are very confident. They don't, and then this phenomenon of gig economy, newer kind of forces, they don't need to be fear. I mean, I'm not talking everybody can become an engineer and doctor. We're not talking of the IITian, or whatever. Out of 100 people, only 1 or 2 can get into IIT, right? I'm talking of the 90
yeah,
ones, right? Then there are a
yeah.
whole lot of new cultural issues, gig economy. They don't want to buy a house, nor they just want to rent it because they say that we want to travel the world, etc. And all. So these are all the trends of the gig economy. The problem
Yes,
is because being consumers also there, and given the fact that India has had not a there's been a tepid economy over the last couple of years. There's been unemployment, wage growth is not, inflation adjusted wage growth is not very good. So if you take a
yes,
IT engineer today who start up from a good engineering college, etc., he might be starting up with 40 to 60,000 bucks, out of which
yeah,
you talk about consumption, etc., 20,000 rupees here, there, and all, and he does everything on EMI, buys his TV, fridge, two-wheeler. There's nothing. So I think the parents subsidize their living. So leave alone. So their credit worthiness is not established. They are over
mhm,
leveraged, right?
yeah,
And
yeah,
the trends, by the way, for such a generation is the growth of a whole lot of lending platforms for personal loans, etc., and all, and which can talk later. So there is again the opportunity is there because they will be forming the large part of the workforce. They will over a period of time form a credit history, and they
yeah,
will probably. But at the moment, in my opinion, they are not credit worthy in the classical sense, right?
yeah,
So there's a
yeah,
big mismatch. But I can tell you that over a period of time, which is 2 to 5 years or so, when they become, let's say, more experienced, etc., and all, the account aggregator model will enable to actually, meet their requirements, because it will be, very quick that, how much of, this guy credit history, etc., and all. So yeah, so they definitely offer a huge opportunity to banks, non-banks, or whosoever, purely because you and I, our generation were a little bit what you call maybe due to our sort of culture, lineage, capital scarcity, to take a loan, but they don't shy away from taking a loan, right?
yes.
Both for consumption and hopefully for asset creation also. So that's my so that both in rural and in urban India will drive the next phase of growth for retail lending.
Okay, thank you. Uh, as you are aware, Harish Prabhu, We have questions coming to you from people can ask you directly or a question coming. There are two. Tyag, just hold on for some time. He wants to ask a question. Before that, let me take the question of Mr. V.G. Kannan, ex-chairman of IBA. He asked you a question. You have rightly mentioned that there is no credit history for those who are new to credit, especially in the tier 3 and beyond cities. How do we create a credit history? Can we give them some credit for small amounts and see their behavior over 6 months or 1 year to create it? Else, it's a paradox, as you say, that they need credit but don't have credit history. If the government gives a loan to gauge them, then there is a moral hazard and may be interpreted as giveaways not to be repaid. Do you have any suggestions, Harish?
Yeah, again, I would say a rather tough question.
Obviously,
especially from BG Kannan. So,
yeah,
but anyway, very good question. Nevertheless, I'll attempt to answer it. And I think
yes.
One of the most important things is that, and we are talking of, unsecured loans to be given to tier 3 and beyond, that too new to credit and no income proof. So what can get worse, right? Mm-hmm. So if I were to make a loan in classical sense, from a lending, and I've been trained in credit also, so, this is a clear reject loan, right? But obviously, I think what has happened is, thanks to the advent of technology, as well as, a certain other what you call way of looking at credit for a no income proof and new to credit. There are metrics which are being developed by quite a few smart lenders, not necessarily based on your CIBIL rating, because you don't have a CIBIL or Equifax or whatever, right? They have developed other proxy or proxy. Let's say one guy is CIBIL score, assuming he has a CIBIL score is, let's say, 300-400, right? And he wants a 30,000 loan for buying his two-wheeler or whatever. With no income proof, new to credit, whatever. How do we do that, right? Now, by the way, the classical customer, he says, boss, I'm not bothered about interest rate. I can only afford, and especially in rural India, say, boss, हमको 1,000 रुपया महीने का किश्त दे सकते हैं या 2,000 रुपया दे सकते हैं, right? So, so from an IRR perspective, and Mr. Kannan would appreciate this, that from a risk-reward perspective, this is a dream customer to have. From a risk-reward perspective,
yes,
the creation of the risk is smartness. So for creation of the risk, you have to throw out your most, use credit, principles, and actually create alternative credit scoring mechanism, which is not 3 or 4, but on 20, metrics. And I can, run you through certain, some of them, so let's say we'll have to, look at his bank statement, right? If he has got a bank account. So how much does he, what is his average banking balance over the last, 3-4 months? So then there are, there are quite a few other metrics, which we can go, it's more technical. But but in order to replace 3 or 4 metrics, which are most important in terms of credit decisioning or personal loans or unsecured loans, you can develop, you can give him a loan if out of the 18 out of 20 parameters, and those parameters are not what you call difficult, but they are, very, very smart in terms of, being proxy parameters, to lifestyle habit, what all you do. So again, that's a factor of, much more detailed.
It's a good answer. It's a good example you're given. Thanks for that. Harish Tucker has a question. Hitesh Tucker has a question for you. Pandemic has impacted disposable income of rural or lower middle class, which is target for consumer loans for retail market. It impacts credit rating. So how lenders underwrite risks under such situations?
No, I think that his question is somewhat similar to Mr. Kannan's, right?
To a large extent. To a large extent, except that he is asking, how do lenders underwrite risk under such a situation?
So as I said, right, everybody's credit history, credit rating has gone for a toss, right?
Yeah.
Obviously, now the credit process as such, Now, I mean, I have a very long workflow chart about, how the credit, it's known as a credit buying process flow chart. Again, so let's say first is, when you get the documents, KYC, blah, 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 you send it to Equifax, CIBIL, etc., right? Either, then you have a score. If it is below 600, reject it. So a whole lot of things are there, right? As I said, even in this situation, we will have to essentially, do an understanding of what and why the credit rating of that particular individual has gone down, right? So today, let's say some people have opted for moratorium. If I am a lender, the fact that he opted for a moratorium means that I will definitely rate him downwards, right? Though his capacity to repay has not changed. You understand?
Yes. Yeah.
So people must have just, so that is what I'm just saying. So when I say a proxy, sort of credit, this is one of the criteria, right? The second is, as I said, what has been the, sort of history? I would, ask him for some other sort of proofs, etc. Maybe today, because his credit rating is affected or her credit rating is affected, I would say that, boss, yes, I will not change the terms of the loan for you, but can you give me a credit enhancement in the form of a guarantor, right? Or some collateral, right? So there are various ways and means of, alleviating the risk that we are taking, even in the current scenario, and intelligently so, both parameterized as well as, more what you call like a guarantor, which is not necessarily a parameter, but you're taking, a more credit-worthy person, right?
Yes, correct. Yeah, absolutely. I think that's a good answer from you. Thanks, Hitesh, for asking this question. And I would now request Tyagarajan from Chennai to ask the question to Harish.
Hi, HP. Nice to see you on BBD platform. And my question is, just to make it short and sweet, which are the, let's say, the emerging opportunities in retail finance post-COVID? Any sunrise sectors that you can probably you can suggest? And second, what is your wish list to increase the digital lending, which is the next explosion in the digital payments? Over to you.
So if I understand correctly, your first question is which are the newer, industries or newer
use retail finance.
Yeah. So retail finance, essentially, see, there are two at a broad stage. I'll tell you. One is because of the credit, ratings, and people are stressed, right? Now, what are the major themes? A lot of people, their jobs have been restructured in the form of, taking reduced salary, right? Okay.
Right.
The second is they have lost their jobs.
Right.
The third is unemployment, which is already lower, right, has become more, right?
Right.
In the immediate shorter term, right, all three are technically opportunities because, all three would want some sort of loan, right, in some more manner or form. Now, largely personal loans is something which essentially, is a big opportunity. Now, personal consumption loans, there are a whole lot of players who are willing to give loans, maybe salary top-up loans, right? So what they do is when your salary gets credited on the 21st or 22nd, you actually have run out of your cash pool. So they will, you go into an app and say, boss, I want loan for 10 days. So you get that issue. So those are the kind of opportunities and they come at a very, very serious price. It's like in English, it's known as usurious lending. So it's usury, right? So where the lender gets crazy amounts of interest. But nevertheless, people are willing to pay it because it's unsecured, available on the fly, through an app within 2 minutes, 3 minutes, right? That will grow. But what is going to happen is that our credit, savings rate is going to go down, and consumption and what have you, and savings rate, household savings rate goes down. You have a problem over the longer term to essentially, because you have to have net investments to fund capital expansion, growth, etc. and all. Anyway, but those are the kind of opportunities, and a lot of NBFCs who have tied up have got into that. The second opportunity, to my mind, is the clean space, right? Let's say solar energy, etc. and all at an industrial level. or the, sorry, earlier it used to be at the grid level, okay, where, you get into a solar project for an electricity board. Then it came to a industrial level or a cluster. I foresee that, going forward, there could be, small solar, sort of panels on top of each house, which is already there, right? So technically speaking, the technology, etc., will be, so that will be another category of retail loans where, people would want to reduce their electricity bill, to invest capital expenditure for solar panels above their small house or whatever, right? That is going to explode, and that's what the government also wants. Those are the kind of opportunities. The third opportunity is the clean energy space, right? Mobility space. As I said, just to give you a perspective, as I said, 2.1 crore, I see two-wheelers are being sold. At some point of today, only 1.5 lakh electric two-wheelers are being sold. In the next 5 years, we are talking of an compounded average growth rate of 87% year on year, whereby in 5 years flat, from 1.5 lakhs per annum, the electric two-wheelers is going to go to 34.5 lakh vehicles. You can imagine, in 5 years. So now, as I said that, when the growth of the ICE two-wheeler industry was backed by financiers, right? Captive financiers, etc., by lending, and 1 out of 2 scooters or are lent, are taken by finance. That is a massive opportunity, for funding electric two-wheelers, right? And that is going to be a space which is driven by government, etc. and all. But again, so these are, I'm telling you, these are very, very large opportunities. There are, smaller opportunities, personal loans, and what have you.
Yeah.
But the fact of the matter is, whether the banking system is geared to, let's say, I'm just giving you a question of, e-mobility, right? So they're not yet geared. Banks, NBFCs, because they cannot still are able to actually understand how do you make a loan, or they don't want to make a loan because they feel that the risk is too high, right? To a milkman in Pudukkottai district. Yeah. So there is a challenge. But yeah, opportunities remain, and the people, and now who, I think what the second question was, who will, right? I mean, so the people, and I'll tell you the who will succeed. Okay. The success, see, every part of the banking value chain, the people who will succeed are, one, who have a huge risk appetite in the unsecured segment, having access to deep pockets of proprietary capital. Okay. They have the ability to have the right to check, technology-based lending, and smart and fast origination, higher loan to value. Higher loan to value, if you ask me a loan for, let's say I want to buy an asset of 1 lakh rupees, I say I'll give you only loan up to 70,000. No. So if you give an 80,000 loan, you have a better chance of creating that loan, right? He'll come to you. Adoption of a low leverage. NBFCs today, NBFCs is waylaid because of their whacked out debt leverage ratios, right? And then, and plus liability management issues. So adoption of a low leverage, low cost delivery model to high quality individual borrowers at rates where they can compete, with other banks with no security, no guarantors, and zero prepayment costs. Targeting high quality banking customers, extremely competitively. So unsecured business loan, personal loans for salaried individuals, and professional loans for doctors, chartered accountants, architects, company secretaries, and including rental models, leasing, operating lease models. These are the huge opportunities which are being thrown up, and not necessarily in urban India. This will be largely driven by semi-urban and rural India.
Okay, thank you, Harish. We have passed the hour, but no question, nothing. One question on technology needs to be answered, because many of our participants are either purely technology or partly technology based. Just take 2 minutes and tell us, can you touch upon the app-based lending platforms and their business models?
Sure. So app-based lending platforms, unfortunately, is a beast which RBI is trying to control. Mm-hmm. Principally because of the fact that you are increasing credit in the system, right? Okay. And that to this secured credit, savings rate goes down. The unfortunate part, the second part, is the fact that, these app-based lending platforms are largely backed by foreign capital. They've raised money from, including Chinese companies, etc., and what have you.
Yeah.
And the problem is that they sense an opportunity, right? And hence they are catching this customer who's potentially they're creating a perennial indebtedness, because they know. But mind you, he's young. He's not doesn't have any past baggage to bother about, right? Oh, we should not borrow too much, blah, blah, blah. We should save. So he knows that, if I just click at the click of a button, he gets a loan, right? Whatever he wants. So he's become addicted to it. He gets addicted to it, right? And he ends up usurious rates of interest, right?
Yeah.
So the rates of interest, go up to 38-40%, and that too for consumption loans. So, the guys who are lending are taking high risk and high reward. The other fallout is, if and when he gets into a debt trap and he's unable to repay, right? There could be unruly elements which will be, coming to, actually recover the loans. These are all, part of what you call the risk reward thing, right?
Yes.
So while creating a digital technology, so today a digital lending app is a no-brainer. Anybody can create it, right? So on the back end, all you need to do is, you need to have your technology integration based on API to, banking system, or for that matter, your what you call CIBIL. All this is all standard stuff, right? Now, then it's a question of the business model and the ability. Oh, I'll pick and choose, Harish Prabhu when he was 24 years old. And Harish Prabhu didn't have any, he wanted to buy a bike, and, Harish Prabhu is vain. So he wanted, loan every month. So he'll get you into that. So I'm not too much of a fan of what you call app-based lending. But yeah, that's where the millennials, right, or Generation Z will be looking forward to, such kind of engagement. So whether from a overall ethics perspective, it has to be done ethically. And I'm just saying that, this should be done. It can be done very easily, but it should be done ethically. And it should be regulated in a form and manner which, meets everybody's constituencies.
Absolutely. Absolutely. Yeah. For the good of citizens. Okay. Thank you very much, Harish. I think we covered a lot of topic. And as you will appreciate, ladies and gentlemen, things are going to change. Okay, so in the retail finance space, a lot is going to come through, and the COVID has also forced banks, retail, to look at things differently, to cater to the urban and the rural population. And so there is going to be a lot of business transformation that will happen, and so will be new things that will come our way. So we will all look forward to seeing those kind of transformations. With these words, I would like to close today's show, and I please join me in thanking Harish Prabhu, who has brought today his 30 years of experience, 30 plus years of experience, and given us a wonderful discussion on retail finance. Thank you, Harish.
No, thank you very much. My pleasure as well as my privilege. So
thank you. Thank you. So, ladies and gentlemen, thank you. So, ladies and gentlemen, before you leave, may I remind you that on Monday, we have a specialist fintech leader from PwC, Mr. Vijay Belgavi. He will be speaking on powering fintechs for positive last mile experience. Something I think many of the fintech enthusiasts would like to hear from him. Do join us on Monday, same time, same channel. We also wish to thank each one of you for making Business Banking Dialogue one of the trending hashtag and webinar platform in digital and social media space. Thank you so much for making it happen, because we are one of the trending social media dialogue show that's happening. We promise to you that we will get better and better. We already are doing that. We are getting you new topics, and we are getting you new subject matter experts all the time. There's a lot to cover, and with your cooperation, we hope to do that. Thank you very much for joining today's show, Tomorrow is Ganesh Chaturthi, and I wish you all a happy Ganesh Chaturthi. Thank you so much, and goodbye.